what a month it's been, from the banking crisis in the US with the SVB saga and everything that's around that, and the people on social media pushing a bank run for some unknown reason, and then inflation statistics coming out which show that actually inflation is slowing down. The stock market never reacts well to uncertainty, and we've seen that in droves so far this month. Over the last month, the S&P 500 is down 2.02%, with the FTSE 100 down a shocking 8.5% since this time last month. It's time then to implement every finance channel on YouTube's favourite Warren Buffett saying, and that is, be fearful when others are greedy, and greedy when others are fearful. And right now, there is a lot of fear in the market. Much of this is born out of the SVB saga, but it has had a sort of contagion effect amongst other banks, when really there's no need for this to happen. This caused Credit Suisse's shares to drop by 8% last week, and First Republic Bank sank by almost 72% within the same week. And all of this was caused because of one issue that one bank had in Silicon Valley. And really, if people hadn't started to worry and have that herd mentality of panic, it would never have got as bad as it actually got in the end. Since then, the Feds have secured everybody's deposits within that bank, which means that it gives a bit more security to the financial system out in America. As always though, everything now is globally interconnected, and the issues that they had over there have now borne their face over here. And that's why we've seen a substantial pullback in the last week or so. So today, there's no better time than ever to hop in and see exactly what's happened to my portfolio, and this is going to be a bit of a painful one. Over the last few months, there's been a lot of movement within my own Vanguard portfolio. Back in December, it was valued at £12,880, and then moving into January, it was valued at £14,129. Last month, of course, we saw a nice increase in the overall value, and my portfolio was at that point valued at £15,304.78. But as I said a moment ago, that's now no longer the case. If we hop into my portfolio right now on the 18th of March, you can see that it's currently valued at £14,485.80. So it's had a decline of around £900 to £1,000 since the last update just 4 weeks ago. My overall personal rate of return is currently at 20.8%. And my overall largest holding is still in the S&P 500, which is around 50% at present. We're also coming to the end of the ISA year with only 18 days left to contribute to the 2022-2023 ISA. And I've still got over £16,500 of potential ISA that I could allocate. Now, of course, I'm not going to be able to do that. I am looking to invest £300, £400, maybe £500 before the end of this ISA year, but we're never going to get anywhere near the full 20k allowance this time. As I said in my previous video, I'm looking to increase my monthly deposits. You can check that one out just up here, where I look at how much my portfolio could be at different ages through my life. But that would mean that I'm hoping to increase to maybe £6,000 next year, as in a total amount invested within my ISA maybe. So check that out in the future. But if we look through a little bit further, we'll click through to view performance over here, which will pull you through to the same screen that we always look at when we do these updates. And you can see the overall graph over time here since inception of the portfolio. So we'll talk through it really quickly. Obviously started off with £500 back in May of 2019. And you can see this, well, relatively slow growth it looks like now, but at the time it felt quite rapid before COVID. And now if you actually look at where COVID was, it really doesn't look like it affected my portfolio that much at all in the grand scheme of things, especially when you compare it to some of the movements that we've had kind of up here. But obviously now, because my portfolio is larger, the swings are also greater. And then coming out of COVID, we saw this really rapid growth, I think, throughout 2021, before we got into this period of kind of inflationary pressures that we're seeing, obviously still seeing at the moment. And then throughout 2022, we did trade relatively sideways until the back end of 2022. Of course, I was still making those monthly investments. And then since back end of 2022 into 2023, we've seen a rapid phase of growth again, accompanied with a nice little bit more investment each time. But we've seen that rapid growth until we get to this little drop off just here. Not that nice, is it? So since inception, the total amount I've contributed to this portfolio is £13,214 now, and I've seen a return to me of £1,245. Now, if you remember back to the last video, that number was almost at £2,000. You can see the extent of the pullback. If we look year on year as well, by clicking on this 1 year bar, you can see that over the last year, so since this point last year, I've actually lost £165, or I'm down 1.33%. And that's obviously a testament to the experience that we had throughout last year. And actually over the last year, I have invested £3,695. And we can also, just for the sake of argument, just for a little bit of interest, look at exactly what's happened so far since the 1st of January, because of course it has been up and down. So since the 1st of January, I've invested £1,220, and I'm actually up just over £50. So I've actually seen a rate of return of positive 0.36%. And if you consider what happened last week, we're not doing too badly when you consider the year thus far. Through to the calculations tab, this just breaks everything I've just been through down in a little bit more detail. You can see that my overall current investment gain or loss, so that is investments that are currently invested that I've not crystallised yet, is £468.16. The investments that I've sold, I've actually seen a rate of return or a return of £341.41. Now that was of course from my life strategy sale back probably about a year ago now. So if you want to see exactly why I sold the life strategy, check the video out just above me here, and I'll explain my 6-fund portfolio and why I've decided to invest not using the life strategy anymore. And my dividends, they're getting really quite nice and healthy now at £473.52. And that is cash that I've received just for holding these investment products. Really not too bad at all. And the total charges for almost 4 years of investing on Vanguard are £38.90. So again, nothing to be sniffed at. We'll have a look at the month-on-month data again, as we always do, and you can see that at the end of February, so looking back at last month now, I ended up investing £250. I actually lost £119.43, and that's because it nosedived towards the end of the month a little bit. Made an interest of 29 pence, and my fees last month, so for the last quarter, were just over £5. So I ended up losing £124 really. But my overall rate of return, or my overall cumulative returns, were still fairly healthy at £1,705. And then so far this month, I've invested £50 into my Vanguard ISA. I've invested a little bit more into some of my other accounts. And of course, with the wedding coming up, I'm putting a lot of my cash towards that at the moment, with just over 2.5 months now till we get married. So yeah, getting fairly close. So far the overall market gain or loss for this month is £459.75 on the loss side. But to make that a little bit better, I've earned 14p in income return, so not too bad at all, which means that my overall cumulative returns were, as we discussed earlier, at £100 or £1,245.80. So you can see January was really, really positive. February and March collectively not too positive at all, so it's kind of cancelled one another out. They're pretty much breaking even from a capital gains perspective. And if you remember back to the beginning, we looked at the year so far, it was up around £50, and most of that therefore comes from this dividend income, which again shows the power of investing in products that pay a dividend. We'll flick through to the investments tab as well then, and you can see here I've currently got £82 in cash. £50 of that is going towards buying another unit of the VUKE, or FTSE 100 ETF, just because that has lost a significant amount over the last week. So I'm trying to get a lot of money in there while others are fearful, going back to big man Warren. The emerging market fund is currently down 7.3%. It's actually got lost capital gains or a capital loss of 14%, but the dividend has again pulled that back up again. So I'm currently down £160 on unrealised gain or loss, or down £76 overall. The FTSE Japan, I'm currently up 18.4%, or £76 overall, including the dividend and the capital gains. VERX, so the FTSE Developed Europe ex UK, of course, because I invest in the FTSE 100, I'm currently up 6.5%, or just under £60. Japan ETF, again down around 3%, but historically that's not really done a whole lot. So down around £20 overall. The FTSE 100, I am up 31.7%, or £291.77. That's got hammered over the last month. But again, the dividend here of £145 is really quite tasty. The S&P 500, my largest holding within this portfolio, is up 27.67% or £615. And that, in essence, is all of the investments that I currently hold within this portfolio. The last tab we'll flick through to then is the holdings tab, and we'll break down exactly the amount of units that I hold and my current weighting in respect to the target weighting, my target allocation. So the FTSE emerging markets, I'm targeting 15%. I'm currently sat at 14% weighting. So all right, really, got 45 units of that fund. The FTSE 100 come down slightly. It was at 13% last time, down to around 12.5%, targeting around 10% overall. So a slight bias to the UK from the usual kind of 4 to 5%, which is allocated. I'm aiming for 10. So I've got 57 units of this ETF. The developed Asia Pacific ex Japan at around 4.5%. Again, I'm targeting 5%, so pretty much there. Got 33 units of this fund. The developed Europe ex UK targeting 12%, again at 11.29%, so fairly there at 55 units of this fund. The FTSE Japan targeting 8% at 7.7%, so pretty bang on again at 64 or 46, I can't really speak, at 46 units of this ETF. And then finally the S&P 500 at 49.33%. I'm targeting 50% because I've got a lot of faith in the US market. I currently own 117 units of this fund. So last week when it lost £1.50 in a day, that was quite a painful day, and that loss alone equated to around £170 in actual loss within my portfolio. So that wasn't a nice one to look at, really. And there's a really quick roundup then of my current Vanguard ISA. From where it was at the beginning of the year, it's climbed and then it's crashed back down again. But that is just part of investing, really, isn't it? And I think the more we get used to these sort of changes within the market, the more we kind of can deal with the volatility that we see. If we are looking to invest for the long term, we're going to see this maybe every 5-10 years. You're going to see pullbacks of up to 50% in some cases. Now, I've not seen any such pullback as of yet, but I do need to be aware that at some point, a 50% pullback could mean that this portfolio drops by a substantial amount. If it pulled back by 50% now, I'd lose over £7,000. So it does just put into perspective the potential swings of the market. But again, as Warren Buffett always says, and lots of other investors and everybody on YouTube always agrees, time in the market is better than timing the market. I'm staying consistent, doing exactly what I've continued to plan to do, which is investing some of my money every single month into a range of different investments in my Vanguard ISA, on Trading 212 and in Coinbase, to plan for my own financial future, giving me security and the freedom to make the choices that I want in later life. As we come to the end of the financial tax year, it's time to take stock of some of the things that have gone really well this year. And one of them is me being very consistent and continuing to invest throughout thick and thin. As I said, the ISA year is coming to an end, and next year ISAs are going to be so much more important because of the tax changes. So I'd recommend you check out this video next to have a look at exactly why you need to be investing in an ISA in 23-24 and even more so in 24-25. And if you want to see my future 1.2 million portfolio, you can check that one out just here next, and check it out, it's a really good one. I'll see you there.